Hello, it's 7:48 a.m. here in Stockholm. European markets have not opened, but silver is getting closer to a new all-time high. So I thought I'd go live and let's see how we are doing. Can we break it in the next couple of hours? I'd love to do it live. So let's see. Bring up the IG markets and just to remind ourselves, we'll go back to the daily candlesticks. It's so here we have the two double tops formed, and this was the last high. It was done in October, was the last all-time high. It was done, let's see, it was this shooting star formation on October the 17th. And the all-time high in this graph, I guess there can be slight differences between markets, was 5,444, 5,444. So, or I guess $54.44. So let's go and see where we are. Let's go to the 5-minute candlestick chart. And we are, so here is the all-time high, and let's see how far away we are. We are 0.57% from making a new all-time high in silver. Obviously, this is a nominal all-time high, not corrected for inflation, and not in terms of gold-silver ratio, just the absolute price. Will it happen? We just recently made new interim highs, so I think the market is ready to print new highs. I don't know if there's going to be a lot of stops or not above it, but it's going to be interesting to see. While we are waiting, you can just look at the rest of the portfolio. We are kind of flattish, a little down. D-wave overnight was having this nice uptrend. Now it seems to be broken. Market was Thanksgiving yesterday, so it wasn't open. But yeah, hopefully we can see D-wave lower today. Topics. Japanese banks still moving against me. Maybe I should have taken a stop, but kind of gaps open and then closes the gap, but still at a higher level. I think dollar yen has resumed its uptrend. Hopefully we'll test the recent high as 158 and go to 160 soon. Cocoa, I don't know where it's going to open. I think it's going to be a little bit painful because it was trading London cocoa yesterday and that was actually moving higher. And Arabica coffee yesterday Arabica coffee wasn't trading. Robusta coffee was trading, but it was kind of opening lower, then trading higher, then closing flat. But coming back to silver, it's really interesting if we can make a new all-time high. If we go to the 1-minute candlesticks, there is an imaginary trend line somewhere here. But yeah, I don't give too much for trend lines. Yesterday I actually discovered Steve Eisman, the guy made famous in The Big Short. It's the hedge fund head that decides to go short the housing market. He has his own channel, and he actually does a reaction video to The Big Short, the movie. I'm kind of tempted to continue watching it while we're waiting to see, will silver continue to make a new highs, or is it not going to happen this European morning? Of course, we should bring up gold. Spot gold. Spot gold is actually a bit further from all-time highs. But also resumed its uptrend after this pullback. And kind of moved away from oversold levels, which here in October, now a little bit more neutral. Come on. Okay. While we are waiting, I have this little celebratory, I don't know what it's called. You pull it and it shoots out confetti if we reach a new all-time high. But let's watch a little Steve Eisman commenting on scenes from The Big Short while we are waiting.
Us to short subprime paper. We kept doing more research, and part of that is kind of shown in the movie. And the first time we shorted subprime paper was October 2006.
There's a bubble. Trust me. Call Venet. Like 50 million in swaps.
So that's that is the character of Steve Eisman, the real Steve Eisman, commenting on The Big Short. And this was published 2 months ago. I can't believe I missed it. It has more than 500,000 views. And I'm already liking it.
It's on the MBS. It's time to call bullshit.
Bullshit on what?
Every fucking thing.
I remember doing it and realizing that to us, that was like crossing the Rubicon. There's a scene in the movie where Steve Carell is in a taxi and he calls the office and he is ecstatic. He's ecstatic because the mortgage market is collapsing. Credit quality is getting worse every single day. It's in the newspapers. And
yeah, that's the, I guess, terrible thing about being short in general and short big macroeconomic themes like that you get excited when people are suffering.
He calls the office to see how we're doing in terms of prices. And he's talking to Vincent Daniel, and Vincent Daniel tells him that prices haven't gone down, they've gone up. And he is shocked.
Mortgage defaults have gone through the roof. Is anybody jumping off the buildings yet?
Why would they? Subprime mortgage bond prices are up.
What? What the hell is going on?
That basically happened. You need to understand something about this market that, in my view, it is corrupt. When you buy a stock, you see it on a screen. You see the price, you put it in order, you get executed at the price on the screen. When you buy a credit default swap from a Goldman or a Deutsche Bank or a Citibank or a Bank of America, you get a price that they give you that is not quoted on the screen. And the price that you get on a day-to-day basis comes from them. And so there were periods where prices were doing stuff in the subprime mortgage market that were really funky, that made absolutely no sense. And we're not 100% sure why that stuff happened, but it was not a completely honest market. And I'll give you an example. We did a lot of trades with Deutsche Bank and we did a lot of trades with Goldman Sachs. And generally they treated us honestly, I will say that. But there were two types of securitizations back then One was called a cash in and one was called a cash out. And for the life of me, I could not tell you which is which, but we did both. And one day we got a call from Goldman Sachs to say that the methodology that they were using to give us prices on one of them was wrong. And we had about 6 or 7 or 8 of those securities with Goldman. And all of a sudden, the price that we had gotten the day before, which was, let's say, 70, they said is now 80. And we were like, what? What the hell are you talking about? You're Goldman Sachs.
Hey,
You just changed your methodology. That's
great
insane.
financial crisis.
So all my guys got in a room. We had a conference call with them. And I said, okay, give me a two-way. And what I meant by that was if the price before was 70.
That's the way to interrogate the price. It's say somebody's ready to sell you something at a certain price, and then you turn around and say, hey, actually, instead of me buying it from you, where would you buy it from me? And that's where you find out, is the price real or is it fake?
And now they're telling me the price is 80. I'll short more of the stuff at 80 all day long. And so they said, okay. So there's a bid and an ask. And the bid, one side was 80 and the other side was 50 or 60.
That's what we call a spread, where you can run a dump truck through it. It's so wide because, they're screwing you, or they don't know the true value.
So in other words, if I wanted to short more paper, even though the price that they were giving me to mark my book was 80, they were telling me that I wanted to short it, I'd have to short it at 60, which was insane, and told me that there was something really funky about this market. And by the way, to this day, I don't know what happened with Goldman Sachs on that pricing. I just don't. But in the end, it didn't matter because the market collapsed eventually anyway. By the way, in that scene where Steve Carell's in the cab, Vincent Daniels says to him, played by Jeremy Strong, that the Morgan Stanley risk guys are here and they want you to cover some of your positions because they think you're taking on too much risk. And Steve Carell says to Jeremy Strong, I want you to walk into that office and say very calmly, tell him to fuck off. And he does.
Gentlemen, I spoke with Mark Baum. He says to fuck off.
And that story is basically true with one caveat.
It's great.
The risk people from Morgan Stanley were not involved with our portfolio at all. The risk people from Point were. And that actually did happen. Risk people from Point had contacted us and said we were taking on too much risk and they wanted us to take down positions. And I told them to go fuck themselves. So now we come to Vegas. Every year there was a securitization.
I would rewatch the movie this evening. That's what makes this movie great, that these scenes, I mean, you can feel it when you watch the movie, that these scenes are very close to reality, and that's what makes the movie so good. Even if you're not into finance, you can sniff out a fake finance movie and a real finance movie, and this is a real finance movie.
Conference in Vegas. I never went. I didn't even know it existed. But we went in January of 2007. I think there were 5,000 people at the Venetian. It was mind-boggling how many people there were. Everybody was there. There were hedge funds there, rating agencies were there, investment banks were there, lenders were there. The whole freaking world was there. And
so it's always funny to me that these people are like dressed up serious people, and then they are just ripping off the economy with basically made up products wrapped in a mathematical wrapper to make it sound like they're doing something sophisticated.
We went to meet everybody, and we met everybody to try and find out maybe we're wrong.
We're gathering information, okay? We're not advertising our short position, right? We don't want to spook everybody.
What we discovered was that not only weren't we wrong, but everybody else was delusional. And that brings me to the scene of 0%. So in the movie, there's a guy speaking at a meeting big meeting.
Business is good, and the mortgage continues to be the bedrock on which this economy is built.
And Steve Carell holds up his hand and says, what do you think the probability is?
That subprime losses stop at 5%.
The guy said it's a very low probability. And he holds up his hand and he says, 0. There is 0 possibility that could happen.
0. There is a 0% chance that your subprime losses will stop at 5%. 0. Excuse me.
And then the phone rings and he walks out. And that story happened.
Mark Baum really did that. When we were in Vegas, he did that. He said that. He took the call to deal with.
The meeting was with a company called Option One, which was a subprime mortgage company owned by H&R Block. And I was in the meeting. Danny Moses was sitting next to me. I did what I did. It wasn't even a question.
Yeah, I am keeping an eye on the silver price to see if it starts moving higher again. We are about, what is it? 40 points from a new all-time high, but not sure. Is it going to happen this morning, or will we go lower again?
Period. I just couldn't control myself. I was so angry about what was going on at the Venetian with all those people making subprime mortgage loans and people were going to lose their homes that I was just beside myself. And I did that with the 0. And Danny basically crawled under the chair. And then the phone rang and it was my wife, Valerie. And I just got up and I took the call and walked out. So that happened. There's a wonderful scene in the movie where Steve Carell calls Ryan Gosling, and Ryan Gosling is in the bathroom at Deutsche Bank, and they're basically so excited because the market is collapsing, and they know they're going to make a lot of money.
Well, nobody's buying CDO or mortgage bonds anymore, and everybody wants swaps.
Swaps are now the most popular product on the street.
That's good for us.
Now, that scene did not happen, although I did speak to Greg Lippman a lot. Let me tell you when I knew this market was done. So in August of 2007, my family and I went to Nantucket for 2 weeks for summer vacation. We rented a little house, and it was the second week of that vacation, and the mortgage market was collapsing. I mean, Countrywide Credit, the stock was in free fall. The prices I was getting on my credit default swaps were just imploding. And I remember my wife and I were walking on the main street in Nantucket, and there was something very odd about people just as we were walking. And all of a sudden, Valerie turns to me and says, wait a minute, where are all the men? And I laughed and I turned to her and I said, oh, I guess they went back to Wall Street to watch the end.
Oh my God.
Near the end of the movie, Steve Carell has a meeting with the executive at Morgan Stanley who is overseeing him. Like I said, that person doesn't exist, but the scene does capture something very, very interesting.
Tell me Morgan Stanley doesn't hold the contracts on these swaps. Holy shit. All this time I've been trying to figure out who I'm betting against, and it's Morgan Stanley.
And she describes to him how Morgan Stanley has an internal hedge fund that was long, a whole bunch of subprime mortgages, and that internal hedge fund had blown up. And Steve Carell is dumbfounded because here he is shorting all this paper, and somebody in Morgan Stanley who's using Morgan Stanley capital is on the other side and has just lost a ton of money. Now, in real life, that internal hedge fund in Morgan Stanley existed. And in the fall of 2007, Morgan Stanley took a write-off. I can't remember what it was. It must have been at least $10 billion. And that event of Morgan Stanley taking something like a $10 billion write-off was the harbinger of what was going to happen in the financial crisis 1 year later, only to everybody. And there's a little bit of a story behind that. So I would say in May of 2007,
I was actually working in, almost makes me nostalgic because I was working in London in Barclays Capital in financial markets. During this time, it was very chaotic. I was fresh out of college. This was my first year in banking, and it started with one of the biggest financial collapses in recorded history, or at least in modern history.
I was talking to someone who I used a lot in terms of understanding what was happening in the subprime mortgage market. And I said to him, I don't understand something. I know that I am short subprime paper. I own the credit default swap. So somebody is on the other side. This is a zero-sum game. If I'm making $1 million, somebody's
Yeah, who's are they gonna be around to pay me?
losing $1 million. And I've never seen a market like this because every day the prices keep getting worse and I keep making more money. But I don't hear of anybody on the other side talking about losses. And he says to me, well, why didn't you call Morgan Stanley? And I said, what are you talking about? He said, well, there's an internal hedge fund at Morgan Stanley where I hear they have strapped on a tremendous amount of subprime assets. I said, wow, I was shocked. So I figured I'd be a good corporate citizen. And I called one of the heads of Front Point and I told him what I had heard. And I said, listen, I can only tell you what I've heard. Why don't you run up the flagpole of Morgan Stanley and see if we could be of help? And we heard nothing. So then a few months go by. I think it's near the end of the summer. And this time I called someone in Morgan Stanley who was fairly senior. And I spoke to her and I told her the same thing. And I said, why don't you run up the flagpole? And she said, and she did. And then she called me back a couple of days later and she said, no one's saying anything. I said, okay. And then Morgan Stanley blew up and took this huge write-off. And so I thought, well, maybe the reason why they didn't listen to me is because they don't know me. And how could they know me? Morgan Stanley only bought Front Point at the end of 2006. It's not even a year. So I arranged to have a meeting with the then president of Morgan Stanley, Zoe Cruz. And so it was a meeting of me, Zoe Cruz, and some of my partners. And we would have to walk over to Morgan Stanley, which is about 4 or 5 blocks away. And the day of the meeting, we get a phone call to say, we're very sorry, but we have to reschedule. And they rescheduled a week later. And then that week showed up and we got a call that day that said, we're very sorry, we got to reschedule again. And so then we were rescheduled for the following week. And I think the meeting was scheduled for 10 a.m. And at 9:30, just as we were about to leave to go over, I got a phone call to say, we're very sorry, but we need to delay the meeting to noon. At this point, I'm a little hot under the collar. So we go over at noon and we wait. Now we wait and we wait. And now it's 12:30 and no Zoe Cruz. And finally, one of the assistants comes out and said, we're very sorry, but Zoe's left the building and we don't know how to contact her and we'll have to reschedule. At which point I stormed out of there cursing a mile away. F this, F that, F this company, F this is ridiculous. I'm never effing coming back to this effing building ever effing again. That's a direct quote. And so we walk back to our offices. Literally, as I sit down at my desk, the TV is behind me and a headline shows up and it says, Zoe Cruz fired. And I turned to Danny and I said, never mind. Near the end of the movie, there's a scene where there's a panel, and it's actually the day Bear Stearns blows up.
He's a great
The very
storyteller.
following Monday, Bear Stearns got sold to JP Morgan. But on that Friday, it was announced that Bear Stearns was having a lot of trouble rolling over its paper, and JP Morgan was giving them a loan. Now, that conference was at Deutsche Bank. My panel started at something like 9:15, so the market had not even opened yet. On the panel was, in real life, was me and Bill Miller, the famous investor of Legg Mason. And much of what happens at that scene is true, but let me add a little color to some things that were not in the movie. So at one point, I just got up and spoke, even though I wasn't supposed to speak because I couldn't control myself anymore. And some of the things that Steve Carell says in the movie about fraud is what I did say.
My firm's thesis is pretty simple. Wall Street took a good idea, Louis Ranieri's mortgage bond, and turned it into an atomic bomb of fraud and stupidity that's on its way to decimating the world economy. We live in an era of fraud in America.
The panel of me and Bill Miller of Legg Mason was hosted by Mike Mayo, who was the bank analyst at Deutsche Bank at the time, with whom I was friendly. And everybody in the audience at this point, including us, knew that Bear Stearns was in trouble. And Mayo, trying to calm people, said, I remember this, he said, In the modern era, no investment bank of any significant size has ever gone down for any reason other than fraud. And I remember I leaned into the microphone and I said, "It's only 10 a.m." That was one of my better lines in life.
Boom.
One thing that's not in the movie, but which is kind of funny, was the speaker after our panel was Alan Greenspan, who at that point was the retired head of the Federal Reserve. And everybody was so panicked about what was happening that by the time he got up to speak, only half the room stayed. There's a meeting at S&P where we go to talk to someone at S&P to understand what the rating agencies know.
You forget how corrupt the system was and how many people have to coordinate their corruption to really make it as bad as it got. Of course, you wonder, how is it today? Did it get better, or is it even worse?
Or don't know. And well, the exact words that were uttered in that meeting are obviously manufactured. They do capture an important point, which was that the rating agencies were corrupt, that they were paid 3 to 4 times more to rate subprime mortgage paper than regular bonds, and they just wanted the party to go on and on.
Can you name one time in the past year where you checked the tape and you didn't give the banks the AAA percentage they wanted?
If we don't give them the ratings, they'll go to Moody's, right down the block. If we don't work with them, they will go to our competitors. Not our fault, simply the way the world works.
Can't be held responsible for doing shitty and illegal things. What are you for?
I had a little interaction with Moody's on top of S&P. So in, I think, May of 2007, Moody's for the first time downgraded the ratings of subprime bonds. Right after that, we managed to get a meeting with the CEO of Moody's. And at the meeting was me, Vincent, and the CEO of Moody's, Ray McDaniel. And during the meeting, Ray McDaniel said that now that we've downgraded one notch all these subprime mortgages, we think our ratings are good. And it was either me or Vincent turned to him and said, "Ray, you're delusional." But I actually liked Ray. And so after the financial crisis was over, I called Moody's to say, I haven't seen Ray in maybe a year, 2 years. We'd like to have another meeting. And they arranged it. And we went downtown to the Moody's headquarters. It was me, Vincent, I think it was some of my other partners. And they took us up to this floor where there are conference rooms. Now, normally the way these things work is you walk into a company office, they take you to a conference room, they then call the CEO, and the CEO comes downstairs and meets you in the room. Not this time. We walk into the room, and there's Ray, the CEO of Moody's. He's waiting for me. I was kind of shocked. I walked up to him. Now, you got to say, this guy had been through hell for these last 2 years. And I walk up to him, I go, "Ray, you look like you could use a hug." And then I hugged him. So we come now to near the end of the movie, the scene at the church. And it's a scene where Vincent Daniel, played by Jeremy Strong, is trying to convince me to cover our subprime paper. And eventually Steve Carell says, "Go ahead and cover it."
It's now or never, Mark.
Okay. Sell it all.
That didn't really happen. I mean, we did eventually cover. I can't even remember whether we covered. It was probably a couple of weeks later than that. And there was no scene of agita and angst that we covered. We decided we were done, but we covered. But that scene at the church, let me tell you what actually happened in real life. It wasn't that church. It was actually St. Patrick's Church. And the Bear Stearns collapsed in March of 2008. But the financial crisis didn't take place until September. And Lehman collapsed on a Sunday. And on the following Friday, which was just 5 days later, that's when this scene really happened in real life. The markets opened, and they opened like a sewer. And Danny Moses was looking at his screen, and he was basically seeing Armageddon. And he had a panic attack. We were all having a panic attack. I mean, we're seeing the end. We were worried that the whole financial system was going to collapse. And so we decided we all needed to get some air, and we walked over to St. Patrick's Cathedral. It was me, Vincent, Porter, and Danny. We were sitting on the steps of St. Patrick's Cathedral. I remember it was a gorgeous day. And everybody was just, doing their business, walking by. And I remember turning to one of the guys and saying, these poor people, they have absolutely no idea what's about to hit them. And then we went back to the office. So it's a great movie. I thought Steve Carell's portrayal of me was incredible, but we never really met that often. So how he got me so well, I don't know. We met really only once for any extended period of time. We met for breakfast on a Sunday on the Upper East Side of New York at a diner. We had breakfast for about an hour. We talked. I couldn't even tell you what we talked about. He had a baseball cap pulled very low over his face so nobody would recognize him. And then I took him home to meet my family. And that was the only time that I ever had any extended conversation with Steve Carell. And yet, he really captured me. But, I remember when the movie came out, people asked us, what do you think about how Steve Carell portrayed you? And I said, amazing. Just an amazing portrayal. But, I don't think I was quite that angry. And then something happened that showed me that I was wrong. So the movie came out to the beginning of 2015. And about 4 months later, the Financial Crisis Commission, which was a commission appointed by President Obama to look into the financial crisis, did a data dump. They just disclosed every single piece of paper that they had. And one of the pieces of paper that they had was a interview that they did with me, I think around 2009 or 10. And I hadn't thought about that interview in years. So there I was, the movie had come out. I think that data dump took place in April of 2015. Anybody could read it. If you Google Steve Eisman Financial Crisis Commission, it'll just show up. And I read it. I read my whole transcript of my entire interview. And when I was finished, I said, no, Steve Carell was right. I was that angry. I was so angry at what Wall Street had done by bringing planet Earth to the brink of oblivion. And I was so angry that they had got involved in the subprime mortgage sector and put all those people out of their homes. So yeah, I was that angry.
I thought we were better than this. I really did. And the fact that we're not doesn't make me feel all right and superior. It makes me feel sad. And as fun as it is to watch pompous, dumb Wall Streeters be wildly wrong, and you are wrong, sir, I just know that at the end of the day, average people are going to be the ones that are going to have to pay for all of this. Because they always do. That's my 2 cents. Thank you.
Alrighty. What are the comments here? Amazing. It's pretty incredible that a video like this is just here, available for free. The internet is a great place. I couldn't agree more. 90% that happened to 10% that didn't happen is an incredible ratio for a movie. Correct. Yeah, this is pretty freaking awesome content. Okay. Price action pretty muted. We are again below 54,000, so maybe we're not going to break out this morning. What's going on in the portfolio? Dollar creeping higher again nicely. D-wave, oh nice. D-wave broke this uptrend here and is heading lower, but D-wave at 8:22 European morning, it's not going to give you a much signal compared to the US Open, US market open. What else is moving this morning? Circle is up. Does that mean that Bitcoin is up a lot? Usually does. Bitcoin 5-minute candles. Oh, boop, boop. Yep. Moving higher. I mean, what is it doing to the 1 hour candlesticks? I guess it's gonna work itself back up to these Fibonacci levels above. Let's just see. So the level, the 61.8% retracement is at 94. So in classical wave movements, I would expect it could go even back to 100,000 before it retests the low of 74,000. I still think it's in kind of, from a short-term trading perspective, it's in a neutral area. Klarna up 4%, which I was considering going long the other day, but I didn't. Lululemon, I mean, really, really strong pre-market open here across the board for European stocks. So let's see if D-Wave can buck the trend. Also a bit of dollar strength. But yes, so silver, I don't think we're going to get new all-time high this morning. So maybe we'll jump on a live stream later if we get closer again. Until then, happy trading.